Robinhood stock to pull back after market hours? What's going on, team? It's Ricky with TechBit Solutions, and this is a common question we've been getting today. As you guys can see, Robinhood reported earnings yesterday, which acted as a negative catalyst. I like talking about stocks that report earnings, so let's dig a little bit deeper and make sure that if you learned something new in this video, you drop a thumbs up and consider subscribing. So one of the first things that I want to talk about is please make sure you do your own due diligence, but I want to talk about how Robinhood reported a positive earnings. They beat earnings per share by 170%, which is absolutely amazing. They had an amazing Q2. They beat revenue by 1%. Again, they still beat expectations. So why is it that Robinhood stock is pulling on back? It's down over 8%, right? Well, a lot of you guys know that when it comes down to earnings, it's not just about what they report, but it comes down to guidance and future guidance. You know, what's to come in the near future. A lot of you guys know that if you look into their Q2, they had an amazing Q2 when it comes down to overall revenue and demand levels being at all-time highs, as again, cryptocurrency and trading was peaking during those times. But as of right now, as cryptocurrency and trading has slowed down, you can see why, again, Robinhood having a big focus on making its revenue through order flow. If trading slows down, then that acts as a direct negative catalyst for potential future revenue. So you could see why that can act as a negative catalyst moving forward. And that's exactly what it is that they shared within their Q2, that looking into future earnings, they have seen a slowdown when it comes down to trading. And this is definitely something that you need to take into consideration. One of the other things that I wanted to quickly talk about is the question that everyone is asking: should you buy Robinhood right now? I want to talk about my trade plan and why it is that I'm going to be buying Robinhood. But I first want to talk about something that not a lot of people talk about when they share their positive outlook on a stock. I want to talk about the risk involved. First off, if you're someone that simply sucks at risk management or someone that simply sucks at position size, Robinhood stock is not a stock for you. Robinhood stock is a stock that sells off over time. It's been making lower highs and lower lows. It's a very volatile stock when it gets going, and it can aggressively pump and dump within a very short period of time, which is why I'm trying to emphasize that if you're an absolute beginner with no experience, you need to learn how to walk before you run, and Robinhood is probably not going to be something that is up your alley. I'm just trying to be as open and as realistic as I can. Now, it doesn't mean that it's a horrible stock to trade or that it doesn't have any potential. Based off previous patterns and how it performs when it sells off, it tends to have nice little rallies, which is exactly why I'm paying attention to it. A lot of you guys know that I love buying the dip, and I'm going to be sharing my trade plan with you, so make sure you share your thoughts in the comment sections down below.
So now that we talked about the risk involved when it comes down to trading Robinhood, I'm a lot more comfortable formulating a plan on how it is that I intend to trade it. So you guys can let me know in the comment section what you think about my plan. And again, friendly reminder, if you're horrible at managing risk, please do your future self a favor and stay away from this stock. I want to talk about where I see there to be a support and resistance level. As of right now, I see an established support level right around $45 a share. This is not exactly at $45, but a general $45 support range. It has hit lows of $44, so make sure you take that into consideration. I see a previous resistance level at $50 a share, and ignore my horrible $50. But one of the things that I shared in yesterday's video is, especially if you're part of the Learn Plan Profit group, I expressed the importance of locking in profits at overbought levels in preparation for a pullback. Now, did I know that Robinhood stock was going to pull back 10% today after being up 10% yesterday? Of course not, right? But I know, and I always try to do my future self a favor and lock in profits or reduce position size where I see there to be a potential resistance level, and I'm very thankful that I did, because now I wanted to share with you, it allowed me the opportunity to have enough money available to buy 1,000 shares of Robinhood at an average purchase price of $46.03. So I already got filled with my 1,000 shares. I see there to be a support level here at $45 and a resistance level at $50. So you can see that my upside, in my opinion, outweighs my downside. But when it comes down to my entry point at $46.03, I'm just going to put 46 flat. Where is it that I intend to exit? Do I plan to sell Robinhood at previous highs of above $70 a share or $60 a share? Definitely not, right? One of the things that I want to share with you is I do not hesitate to lock in profits. And if Robinhood returns to $50 a share and I see there to be any indication of a resistance, I'm not going to hesitate to lock in profits, and I'd be more than happy to do so even if Robinhood continues to rally. I think that's one of the worst feelings, and I'm sure a lot of you guys can agree, is where you're in the green, you have made a decent amount of profits, but you are in fear of it continuing to indicate signs of an uptrend, that you refuse to lock in profits, and it goes from being a green trade to now a red trade. And now all you want it to do is to simply recover because you have no more money to buy the dip. That's what I want to avoid. I like to keep things simple, and this is why it's so important to set up a game plan and to stay disciplined to follow through with it. And I need to talk about risk management, right? Where is it that I plan to cut losses if it breaks below? And that's going to be at $44. We have seen it get really close to that $44 support range. And the reason I'm sharing this with you is because if things were to go south, as they easily can, right? Robinhood on the 4-hour time frame is making lower lows and lower highs ever since its peak. So we can't be surprised if it begins to sell off. Do I want to bag hold 1,000 shares of Robinhood? Definitely not. I know that I don't. So what is it that I can do? I can set up a game plan on where it is that I intend to manage my risk, because although it sucks to lose $2 per share for 1,000 shares, you know what would suck a lot more? Bag holding 1,000 shares all the way back down to $30 a share. That would suck a lot more. So it's the idea of, yes, it's not the best case, but it's the best case scenario based off of that potential outcome. And this is why it's so important to manage your risk. It's to understand the big picture, that your upside always outweighs your downside. But if things are to go south or were to go south, that you have a plan in place to be able to mitigate and manage that risk. So when it comes down to my ratios of my upside versus my downside, based off of my entry point to my exit and my entry point to my stop loss, there is a greater upside than there is for my potential downside, which is a 2-to-1 ratio. One of the things that I also do want to share with you is this is a goal, right? So if all of a sudden Robinhood were to gap up, right, with my entry point at $46 and it gaps up to $55, I'm going to decide to lock in profits, right? But vice versa. Let's not just think about the best case scenario, and let's take into consideration the worst case scenario. What if Robinhood were to open at $40 a share? But my stop loss was at $44, right? But stop losses don't get filled after market hours. You can't manage your risk when you hold a stock overnight. The reason I'm sharing this with you is I want you to always take into consideration what can happen. And if there's unfortunate news and Robinhood gaps right back down and loses 10%, loses 20%, make sure that the position size that you choose to take is something in which you can tolerate. And if right away you're like, if you do the math, right? I don't know how many shares you plan to buy of Robinhood, if any, but let's say you intend to buy 100 shares because you want to do the same thing, right? But if you don't take into consideration that it from $46, if it opens up at $40 a share, you know, that's over a 10% loss. You're like, I don't want to lose 10%. Then guess what? What's my simple solution for you? Do not buy before confirmation. It's that simple. Just because I'm doing it does not mean that you should. If you can't tolerate that risk, don't put yourself in an uncomfortable situation. I am never here to share my plan in effort to convince you. I'm always here to talk about the risk and why it is so risky. But it's because I see the upside to outweigh the downside that I'm okay with tolerating that risk. And at the end of the day, it is simply our job to take advantage of stocks and opportunity in which we see value in. And with this plan, it makes sense to me. If it doesn't make sense to you, then guess what? You can wait for confirmation, you can not trade it at all, or you can focus on stocks that don't move as aggressive. That's the beautiful thing about the stock market, is that you are the final decision maker on where it is that you choose to put your money. So I hope that this video shines some light on why it's so important to set up a game plan when it comes down to any trade that you choose to take advantage of, both risky or conservative, and why it's so important. And if you feel like you learned something new, please consider dropping a thumbs up and subscribing to the YouTube channel. I'd love for you to join us to our live trading session. And if you want to join us at Market Open tomorrow, make sure you click the second link down below, and I'll see you at Market Open. Until then, like always, let's make sure that we end the year on a green note. Take it easy, team.